Hi, ladies and gents. This is Quantum Edge. Quantum Edge is a channel dedicated to mid to long-term trading strategies, utilizing advanced mathematical and physical tools. Nothing in this video should be taken as financial advice. Always do your own research before trading. Well, let's look at the bigger picture here. How is Nasdaq doing? As we glance over this power spectrum, we can clearly see there's a dominant wavelength of 80 trade days, very stable and has lots of power. And as we move into the wave shape, we can see that this wave is close to a top, but it does not mean that the market will go down immediately. Then let's look at the chart analysis. Price has made the low on the 7th of April, which is the trade war climax. There's a clear trough for the last 80-day cycle. Now price has pierced through the 80-day FLD, creates a target at around 23600 level, which has not yet been hit, and historically, the 80-day FLD up target has a hit rate over 83%, which implicates there's a high probability that we can move up around 7 to 8%. Let's move on to TradingView to see what additional information can we get. We can see that the 23600 target coincides with fib targets for this up move, which creates a high conviction short up there if we can get a bullish event at that time. But it is also clear that price has lost the momentum since it lost the first trend line support and is banging on the second one. With Middle East escalation and potential trade war re-escalation of US and China, there is also the possibility that the market will grind down from here, and potentially we can have already made the peak for the concurrent 80-day cycle. To conclude, NQ does not have an imminent trading opportunity. We can either wait for the natural flow of money to bid the market up to 23600 level and look for bullish events to give us a short, or we need to wait for the risk-off events to drive the market down to the next 80-day cycle trough to give us a buying opportunity. Then let's look at NVDA. NVIDIA has an even clearer 80-day cycle compared to Nasdaq, and it has a 72% hit rate for the 80-day FLD. The latter has an upside target of 142, which has already been hit, and the price has heavy resistance to the upside. Right now, we can wait for the potential events to unfold. Either Trump tightens chip controls to China as a way to regain leverage it has lost due to rare earth control, or Trump could throw in the towel and loosen chip control to China. In lack of new events, we're waiting outside of the arena. Then let's jump to Tesla. Tesla has a picture-perfect 115-day cycle. It has a win rate of 57% for the upside FLD targets and a win rate of 54% for the downside, which makes it a perfect trading instrument because it has minimum trend interference. And now we have an upside FLD target at around 465, which is too far to travel given the limited time window left in the 115-day cycle. The Elon-Trump feud makes a perfect peak candidate on the 29th of May. The market finds it mediocre for the new robo-taxi line, and there is potential EV sanctions coming if Trump finds it difficult to take the defeat from London negotiation. To conclude, although the price for Tesla can still move up with the market, it is more profitable to wait for a new 115-day trough in around September. Finally, let's take a look at LEN, which is a housing stock. We can see it has a very powerful 170-day cycle. The price hasn't even come close to the FLD and is long overdue for upside pierce of the FLD. Going back to TradingView, we can see at each 170-day trough, price seems to react very well to the 10-week moving average. Whenever price closes above the 10-week MA, it indicates the 170-day cycle has bottomed. And right now, the price has closed above the 10-week MA again, and even better, has found support on the 10-week MA on last Friday when Israel-Iran war broke out. This would be a standalone very good asset to long, since the risk-reward is pretty decent. We have a clear stop loss below the 10-week MA. How about events? Leonard's next earnings will be released on the 16th of June on Monday after the markets close. You can get in half of your position at around current price and leave the other half to take advantage of the earnings season, which means if the price drops significantly upon the earnings, you can make the entry with the other half. On a longer time frame, housing is going to benefit significantly from rate cuts. With U.S. national debt level at this level and Trump's administration's demand for Powell to cut rates, if oil is not going bazooka anytime soon, I would say a surprise cut of 100 basis points is not so unrealistic, which could add as a further catalyst for Leonard to move north. Alright, this is for today's market update. Please like the video. It really helps the channel to grow. And if you want me to look at any assets of interest to you, please leave the comments down below. Thanks.